CNBC TV 18 news break. Sources say there's a high possibility of IT major Infosys cutting its FY17 guidance. Kritika Saxena and Reema Tendulkar are joining in with all the details. Kritika, first let me come to you. What are you picking up? We heard Mr. Vishal Sikka sound fairly, cautious in that call with analysts just a couple of days back.
Well, our sources have indicated that Infosys is likely to cut its FY17 revenue growth guidance for the full year. Remember, the company has already cut its guidance once, so from 11.5 to 13.5%. They cut their guidance to about 10.5 to 12%, and we understand that this is likely to be revised downwards. Now, what we are picking up right now is that there may not be a very significant guidance cut. There will be a marginal cut, and there's a possibility that the higher end of the guidance band is likely to be revised downwards. Over and above that, Infosys is looking at a strategy in the long term where they may explore the possibility of narrowing the guidance band. This is still in the works. They are still right now contemplating the kind of visibility that they have in the market for the next 1 year and deciding the exact number that they want to put to it. Of course, we will only know the official figure in the Q2 results, but this is something that has been a possibility for a while. In fact, just to reiterate what Vishal Sikka said, and Infosys as well referred us to what Sikka had to say in the JP Morgan conference, was that we do see risks that will get us towards the territory of downward revision of guidance. So not confirming that there will be a guidance revision right now, but very clearly hinting towards it. Now, in the meantime, Infosys is putting levers into place to arrest the kind of volatility that they have been saying, to increase productivity, and that of course includes the possibility of them splitting their 4 key verticals into smaller business units. They're looking at accelerating growth, they're looking at expanding digital, increasing investment. So there are multiple levers that they are putting into place, but at least for the next 1 year, the volatility is likely to continue. The issues in BFSI are likely to continue, and hence at this point in time, keeping the kind of revenue growth guidance that they had is slightly difficult.
All right, Kritika, thanks so much for that. Now, the question is that has the management started talking enough to analysts? Is it already getting baked into the price or not? We had, of course, CNBC TV 18 conducting a poll among the analyst fraternity to assess their expectations from Infosys. Reema has been working the phones for us and doing that poll. So, Reema, what is the sense? Because we've been getting this cautious commentary for a while. So is the street now ready to deal with maybe a guidance which will be a single-digit number?
Yes, the street is expecting a guidance cut. In fact, we did a dipstick survey, and now the analysts are expecting that guidance, which currently stands at 10.5 to 12% in constant currency terms, could be lower to 9 to 10.5%. So that's a very steep cut. And the key reason they're saying is this time the management could be a bit cautious because they would have already had to lower their guidance for 2 consecutive quarters for the same year, and they don't want to do it the third time around. So they could be cautious in delivering, in giving out their guidance, so that for sure they will be able to meet it. The street is working with a constant currency growth of 9.5 to 10%, the actual growth by Infosys. That apart, as we've been saying, the key risks include Brexit as well as BFSI. Q2 is likely to be better than Q1. Q1 was a growth of 1.7%. Q2 should be about 2.5% in constant currency terms. That's because the incremental news in consulting appears to be far more positive. On margins, the guidance band currently stands at 24 to 26%. The street expects Infosys to deliver at the lower end of the band. That's between the 24 to 25% mark. A very slim chance of the margin band being lower as of now, because I don't think this, the company can always use levers like productivity to prop up their margins. At the same time, when you're giving a revenue warning, you don't want to also give a margin warning and all panic on the street. But as of now, the street is very much expecting a guidance cut, and the new guidance could be anywhere between about 9 to 11%.
All right, Reema, thanks so much. So it's a long way. At the